I want to get across to the latest story on Nvidia. Ed Ludlow breaking some news in the last 24 hours. That news now confirmed by the man himself, Jensen Huang at Nvidia. Ed joins us now for more. Ed, what's the latest? Just go through your reporting and what you've been learning.
Yeah, the structure is really important. So xAI needs a way to finance the GPUs for its data centers, Colossus 2 particularly in Memphis. They've set up a special purpose vehicle with this pool of investors. The target is to raise $20 billion for the SPV, $12.5 billion of debt, the remainder in equity. And essentially, the investor pool buys the GPUs. And xAI leases or rents them over a period of 5 years. In this case, what Jensen Huang has just confirmed in another network is that they are participating. Our reporting was that Nvidia would put $2 billion into the equity chunk of the SPV. And what Jensen Huang was saying in that interview is that he regrets he couldn't put more money into it. He said it's not venture financing, nor is it vendor financing per se. But I'd say that's as close to a sort of ironclad confirmation as we're going to get. Because the whole point of an SPV, as you know, John, is usually the participants do so because they want it to be discreet. You know, you're not. You
just
don't
to
have
jump in, buddy. I don't want to be combative about this, but Jensen Huang doesn't get to decide what it is. That's what it is.
Right. Yeah.
That's what it looks like. That's what it smells like. That's what it is. Now, Ed, I understand what they get out of it because that vehicle is going to buy ultimately what Nvidia provides. What do the other investors get out of it?
Yeah, so I think there's still a lot of reporting to do on whether they end up with any xAI shares, but you basically get guaranteed returns, right? xAI doesn't take the debt burden onto its own balance sheet. But because xAI is funneling lease fees to this pool of investors, they are getting guaranteed pay, although, you know, the specifics on the payment schedule we don't have yet. But the main point, John, is like the GPUs are a very big initial upfront capital expenditure, but they're also a depreciating asset, in part because in a year's time, the generation of chip that's installed will be obsolete anyway, but they lose their value over time. And so the investor pool know how much they're going to get paid back, whether be it monthly or quarterly or whatever. And all told, they can then work out later what to do with those then obsolete chips.